Yeah, now let's just focus everything on Wyckoff accumulation. Wyckoff accumulation. This is going to be there's still some people joining. That's the reason why I'm taking the time. All right, so we're doing Wyckoff accumulation today. Accumulation is literally the opposite form of distribution, but then it's got a different style or tune to it altogether. And there are some special things that you should be looking out for when you're looking at Wyckoff accumulation. Once again, I am going to take my time and go through the processes without looking at the chart, just using lines to demonstrate. And then afterwards, we're going to go straight into the chart where I'm going to try and find some examples for us. We're going to do some few examples. I'm going to allow room for more questions for people to ask questions, and then I would answer them. And then we'll bring our Zoom call to an end. If that is all right, can I have a 2 in the chat box, please? Fabulous. So what is Wyckoff accumulation all about? And where does it usually occur in the market? Wyckoff accumulation is the twist and turn, the fight between buyers and sellers, where most of the time the sellers are winning. The twist and turn, the buys and sell between buyers and sellers, where most of the time the buyers are winning. Yesterday we looked a distribution schematic where it is a twist and turn between buyers and sellers, but then sellers are usually winning. And we realize that distribution is always happening when price has reached a buy climax. In the instant of accumulation, this is going to happen when price has reached a sell climax. So what do I mean by a sell climax? You're going to have price moving from the top to the bottom. So we're going to have a downtrend. But then on the downtrend, we're going to see some sort of movement. The first topping point in the downtrend, again, we saw this on the Wyckoff distribution, is going to be our PS. That is the PS area where price stops to make it first stop. So it is the same thing as we saw on Wyckoff distribution. However, just like we saw in Wyckoff distribution, there is always going to be another push, because just around this area, people are going to begin to think, yes, the selling pressure is all gone out. So maybe I should start looking for a buy. And by the time you realize, all the people that place buy entries around this area's money are going to be taken away. And what's going to happen? The money taken into the market creates a huge form of liquidity for smart money to push price even further low. So we see this sort of movement. So that movement is going to break the structure of the PS all the time. Let's change this to a black. Are we following? Give me a one if we are following. The one in the chat box, please. Good. So now the last push from the PS is what we're going to call the sell climax. And just like in the form of Wyckoff distribution from the buy climax, we get something, some sort of reaction in the market, a very sharp movement away from the sell climax. And in this case, it is known as the AR, the automatic reaction. Almost every part around this area looks to see we have the same structure on the Wyckoff distribution. Again, from the AR, usually your AR is going to be within the supply zone of a PS. Rarely we see AR go above the supply zone, but slightly above it, it will drop down again. We're going to see examples where the AR did go above the PS supply zone and examples where the AR stayed within the supply zone. From the AR, we see price hitting the supply zone and moving back down again. Most of the time, we're going to see some sort of equal low created or ST inside the leg of the CS or just below it. In this instance, we're going to leave it just below it. But once we go to the chart, you're going to start seeing the difference. It's not all going to be picture perfect. It's not all going to look so good. Just like I'm showing or I'm demonstrating on here. That's the reason why it is very important for me to go ahead and teach you how this looks like on the charts. So from the ST, we're going to have another form of reaction. And this time around, this reaction is just a normal reaction that do happen away from the ST. Usually tries to go above or just inside the PS supply zone. What do we call it? What I know that we call is some sort of name called the AR. Sorry, the AU. The AU is a name that we give it to the reaction away from the ST. And from the AU, once again, we're going to get a reaction all the way down to the favorite, what most of you really know about Wyckoff. In the chat box, what do you think that is? That's the spring. Thank you, Phil. The spring. Lots of you know about it. Lots of you can pick it up, see it so many times. On your chart, you can identify it so easily. However, how price really gets to create springs is the question. So from the AI reaction, usually you're gonna get a spring created. And the key thing about the spring is all the time the spring will go below the liquidity of the CSC and then the ST. I'm gonna make this an orange color. So the liquidity below SC and ST will always be swept by the spring. And once your spring is created, every form of liquidity about here is now going to be taken away. So you have some sort of double bottom and you have some sort of double top. It's not going to look picture perfect when you go on the chart, but usually this is some sort of shape you're going to be seeing when it comes to Wyckoff accumulation. And from your spring, what you realize is that right from the spring, price will shoot up straight away, breaking market structure. Most of the time, the spring price will not leave the spring straight away. What it does is it breaks above the liquidity that was swept, the liquidity borderline. Usually people will say support, whatever it is, price will break above it slightly like that. Hang on a minute for me, guys. I need to quickly do something. So usually price away from the spring is going to create some sort of movement up like that. And then that is not the straight movement. It will come back down again to this support area and respects it. This is where usually you're looking to find your entry because we're going to see some sort of break of market structure from the move of the spring that comes above the liquidity sweep support. So we shall retest it again in the accumulation. And this is where usually you're trying to find your entry for the buy. And from here, we'll see that price breaks above that liquidity, breaks away from the accumulation zone. And the nicest thing about this area is that price don't really leave straight away. It does some sort of retesting of that structure. So how many entries can you have? Another potential area you could enter is here. This is when people start pulling the fibs and looking to have entry around 50%, around 75%, around 71%, 61%. But you realize that price only do a very, very short, very, very faint retracement. And this level we call the SOS, sign of strength. Most of the time, price will never do a big retracement. It will do a very faint retracement just above. retesting the zone of the accumulation. And what do we see next? A fly up. Boom. So the areas we will be looking to enter for the buy position is usually the first breaker market structure away from the spring, the retracement that happens, we want to enter, especially when it lines up with the resistance of the ST or the support area ST has created after price has broken above it. I repeat what? What you just said. So our first entry is always going to be the first break of market structure when price is moving away from the spring and that retracement. So the break of market structure, usually from this movement, we're going to see some sort of break of market structure, either on the same time frame or a smaller time frame. Just like I said with distribution, if you're looking at Wyckoff accumulation on 1 hour time frame, you're going to go on 30 minutes or 15 minutes time frame for your entry, for your break of market structure and entry. So this push up from the resistance, we're going to wait for that retracement. And this push up on the 15 minutes, assuming we're looking at 1 hour time frame, on the 30 minutes, we have to see some sort of break of market structure. So the first retest usually comes back down to 50% of the spring sell candle. Well, yeah, somebody's giving us some gist. It's not always 50%, but then you realize that once we go to the chart, we're going to see some sort of imbalances created inside that movement away from the spring. Institutional candlesticks created inside that movement away from the spring. And in this case, anybody on this call that I asked yesterday to take a picture of my screen, I asked you for a specific screenshot. Supply and demand zones. And you're going to realize that in the move away from the spring, there is always going to be something we call a rally base rally. RDR. So the movement away from spring, we want to see some sort of imbalances. We want to see some sort of RDRs. We want to see some sort of liquidity sweeps, sorry. And we want to see some sort of institutional candlesticks, clear institutional candlesticks that needs mitigation. I hope that is right, guys. Give me a 3 in the chat box if everything is clear. And if you have any question, feel free to unmute yourself and ask the question. Okay, so somebody's saying our charts made of Wyckoff schematics only, or are there points where there are no Wyckoffs? It's not a silly question, Antonia. Most of the time, Wyckoffs are being created. It's part of the schematic that happens in the market. There are so many different schematics. The Wyckoff schematic, the 3-way schematic, the 5-way schematic. I've had the opportunity to learn all this stuff. So I know when I'm seeing a Wyckoff distribution, Wyckoff accumulation, a 3-way schematic, and a 5-way schematic. They are all different and they require different elements to trade them. So it's not always going to be a Wyckoff formation. It's up to you as a trader to be able to identify this on your charts. Are we clear? Can I have a 1 if we are clear? Then I can move on straight into the chart. "17 people in the call, but I'm having very little amount of people communicating right now. Before we go into the chart, I want everybody to do this for me. Take a screenshot for me. Take a screenshot for me, and when you're done, give me a 2 in the chat box. Good. So now with your screenshot, we're going to go on the chart, and I want us to identify these things together. I'm on card JPY page right now, so I am going to look at card JPY first. We're going to go through the chart and see if we can find any sort of Wyckoff accumulation. And by the looks, can anybody identify a Wyckoff accumulation on this chart? On my page, on my current page. All right, Lee, if you're able to use the annotation on your Zoom, can you select it and circle the area for me?
Hey, how do you do that as the annotation bit, Francis?
If you go on your more, something like that, menu, something like that, it should give you chance. It should state somewhere else, annotation.
I'm just looking at the drop-down menus at the top. I can't see it.
I see more on my screen. That is how I can annotate people's charts.
Oh, annotate. I found it under view options.
Fabulous. I can see the name. I think somebody, Alethea, is annotating. Yeah, I can see Lee now. Good. So circle around that area for me, and everybody can see exactly where you've circled.
I think it's here. But I always think it looks like there's one here as well.
Brilliant. Thank you very much. That's it. Now I would be happy if you can clear it for me.
Cool.
Then we can dive deeper. So if I should extend and widen this area, guys, look at that. Does that look like something we are familiar with? Yes or no? So look at how huge the price movement was. All the way from the top. The first area, it didn't stop. And straightway price did what? Pushed down. So in this case, this will be our PS. This area will be our biclimax. We're just following price. This would be our automatic reaction. This will be our secondary test. And this will be the AU. And what is this one in the chat box, guys? Oh, sorry, guys. I did a mistake somewhere. This is our SC. I'm still in the head of distribution. Thank you, Antonia. But yeah, this area becomes our spring. And let's see what it actually entailed and what happened. There was some form of liquidity buildup around this area. Some sort of equal low that was created between SC and ST. And you can see directly from here that the reaction of ST was inside the SC. If I should go on a lower time frame, we're going to see that SC actually reacted from an institutional candlestick. Can everybody see that? Brilliant. I thought it was SC. Can everybody see where I have labeled ST did a reaction inside the institutional candlestick that was created as SC? It's only Lee seeing it. The rest of you, where are you? Good. And this is how you will be able to trade most of the time the ST to the AU for a little buy, where always your TP is just below the finishing point of AR. Hold on for me a second, guys.
Can't hear you, Francis.
Hello. Sorry, I said to excuse me for a second.
Okay.
Sorry, I'm back. So this is how we can trade most of the time the ST to the AU for some partial profit. But then in our heads, we need to remember that the actual procedure, the process that is going on is Wyckoff accumulation, and everything above here is going to be our equal high for liquidity sweep. So just as we can see, we have some sort of liquidity build up underneath and liquidity build up on the top. And look at what the spring did. We got the spring nicely created that took away the liquidity underneath here. Straight away, price shot up. What did it do? Went straight to get us the break of market structure on this time frame. However, let's move small time frame and see. We can't see it on the 1 hour time frame, so we go to the 30. And this is usually what I'm talking about. If we go on a smaller time frame, you would see that this wick is actually a break of market structure that happened just on that support area for ST. We're going to see this. I think I should show it because of for educational purpose. It's still not visible here. Let's see on the 5 minutes if we can get it. And this is where moving through time frames becomes very important. I can't get 5 minutes on here, but you can clearly understand what I mean by the break of market structure on smaller time frame, just around the support area that is being created around the ST. So immediately we had seen the break of market structure here, this little drop, and you can see it went straight to fill an imbalance and straight away price did what? Left. For our SOS, I told you usually the retracement is very faint. So when people are pulling fips and looking for price to usually drop so big, price will just do some sort of little retracement. And what do we see? It flies away. For everybody on this call that understands the use of mitigation, this is where the use of mitigation candles are key. So price usually mitigates a violated institutional candlestick away from the spring, and then the buy continues. I hope that is clear, guys. Good. Yes, somebody is asking a question about the AU. The AU is some sort of like attempted up thrust. Attempted up thrust. You understand, but I don't know how to identify them. All right, let's do some more examples. Maybe by the time we finish, people may just about understand and know how to use the Wyckoff. Let's check some more examples on Euro USD. Sorry, GBP USD. How do you know the spring is finished? I wanna have a good example where I can tell you exactly how I know the spring is finished. Okay, let's have a look in this scenario. Let me pick another GBP USD. So in this case, what I see around this area is what? I'm starting to see what we call Wyckoff accumulation, PS, SC. But guys, we have less than a minute on the call. Once the call drops, just jump back on and we'll be here. We can do some more examples until people are comfortable, and we will bring our session to an end. Yes, I use volume bars just like we use in distribution. But yeah, we have less than a minute on the call. So guys, jump back on once it closes.